What is going on, guys? Welcome back to the channel. Are you still here? Wow. So, let's talk about it, right? As always, this is not financial advice. I'm not a financial advisor. It's just for entertainment purposes only. What were we looking at yesterday that did not hold, that should have? We got the abandoned baby. We got the double bottom. We got some nice tweezer bottom wicks down there. We sucked right back up into our trend line, but we couldn't hold it. We had to hold that. We had to hold that 35, 36 cents, and it gave out. It gave out hard, and it's still giving out. What's going on in the markets? Silicon Valley Bank shut their doors. Not the greatest news. What's happening in the markets? Everything is bleeding. SPY, IWM, Dow, doesn't matter. Any ticker that you're looking at more than likely is bleeding or barely break even. There might be a couple exceptions to the market today, but everything's getting hammered. Everything. The setup was there for the reversal, and the markets did not cooperate with us. So, I wish that wasn't the case. I really wanted that reversal, but we didn't get it. I was wrong. The markets were not kind to me. I'm sorry. Sometimes I get things wrong. It happens. Let's go from there. If you're still in here, are you in here longer than you wanted to be? Have a trading plan always. Like we said, at that 236 retracement down there, around 30.5 cents, give or take, 2 cents or so. We knew it would get a little bit ugly. It did start to get a little bit ugly whenever we hit that area. Starts the snowball effect, right? Once you're on that downtrend, it stairs up, it's elevators down. You get that downtrend, you start triggering stop losses, you start getting shorts that could want to pile in. It starts a whole party, and things just do not go very nice. Let's say that. If you're trying to play it up, things do not go very nice whenever the snowball effect kicks into the downside. And that's what we have right now. So we're just kind of looking to see where it wants to pump the brakes and try to make a reversal. We want to see when the markets are going to make their reversal overall in the grand scheme of things. If you've watched any of my other videos, you know I'm very bearish on the markets. I've been talking that they are coming down, they're coming down, and they're coming down. We will get those little boosts because I think big money needs time to get their money out of the system. So let it pump back up, hand their bags off to somebody else, sell it off, let it pump back up, sell their bags off to somebody else, bring it back down. So I do think it's very hard to play anything to the upside right now, and that's just the way it is, unfortunately. So let's look at the charts. Let's see what we're dealing with. Let's see if there's anywhere that there could be a stop or a break in the action and turn things around, or where we might just say pull the ripcord. I can't tell you what to do, but I'm going to show you a couple of key levels where I think ripcord might be very appealing. But also I'll show you a couple of things that look a little bit promising. Does that make sense? So let's look at it. Let's look at the charts. We'll look at the Ortex. I'm sure it's not correct, and we'll go from there. So if you are still here, have a plan. Don't let my decisions be your decisions. Am I still in it? Yes. Should I be? No. But you know what? It's not that bad. Really, it's not terrible in my account. I don't have probably large positions like some of you guys do. So, like I said, most of mine is options trading, and then I do like 10 to 20% that I will put towards stock trading. So it's not terrible as far as where I'm sitting, even though the red numbers don't look great. So what are we watching right now? We're watching what I want to say is probably going to be a falling wedge that we're in. We'll see if it widens out and creates some sort of more so bull flag, but as of right now, it looks like a falling wedge. We're kind of riding in it. Could there be a breakout? I'd love to see a breakout. I just don't know if the markets are going to give that to us. I do think the SPY is getting close to the point where it's going to want to make a little bit of a bounce. I have my line at 384.13 on the SPY for where it should hit the brakes and turn things around for a pump today. So we'll see. It's like 1:50 market time right now as I'm making this video. So if I am correct with where I think SPY level is, then I think it's going to turn around and push to the upside and just, burn some theta and take some of that money away from those guys that were playing puts. If you were playing puts, very beautiful hedge as far as everything's going if you're trying to play to the upside. So we gotta take whatever direction the market's giving us. So let's see how that goes. Let's see if we can get a breakout of this falling wedge. If not, we're watching it to the downside. I'm looking at the 200 MA. It's sitting somewhere right around 22.5, 23 cents on the daily. And I want to see if that's going to be a spot that might catch if we don't catch sooner. And then the other spot is almost going to be down where the party started, and kind of where our falling wedge right here would end up, which puts it around 17.5 to 18 cents. At that point, I don't know if there's going to be anything left to talk about. If it gets all the way down here, that's going to be brutal. That's going to be ugly. But we just want to be, keeping an eye on where we might want to exit, or where it might be a DCA area if there's any confidence left in the play. We followed these on Bed Bath & Beyond before with FTDs, kind of how they get out of the system, and I do kind of tinfoil hat that I think market makers short the market, and then they cover their FTDs, and they short the market, cover their FTDs, which creates a downtrend. They're not giving us enough coverage of the FTDs, buying it back up high enough that you can even get out. We've seen it on several tickers. I mean, what we've talked about Redbox, we've talked about Bed Bath & Beyond, we've talked about I don't know. I'd have to go back and look at all of the stocks we've talked about with all the nefarious actions that go on. And we've traced them back. Like, we'll pull up the FTDs and we'll talk about how, it could be seen because we get the dates in there. So, if they are doing that, then it may not be nefarious shorting that's actually bringing us down. It could be, but it may not be. It may just be the market makers trying to settle out those FTDs, and once they get their books cleaned, then maybe they'll give us just a little bit of breathing room, because at that point they're not going to care again. There's no options that are blowing them up in this thing. Just the high frequency trading and trading over the float that always creates some sort of mess, and that mess gets straightened out. A lot of times people think FTDs are going to send something to the moon. In my opinion, a lot of times FTDs just bring you down lower, and then you got to start climbing the stairs from there. So I always say I would prefer to not be in a short squeeze play, and I would prefer there to be no FTDs, not only in my plays, but I don't think they belong in the markets at all. But we're playing in the markets. We gotta play with what we got, right? We can't do anything about it. We're making a lot of noise. The changes may be happening, but they're happening ever so slowly. And why do they want to change it? It's made them money for so many years, and retail has just been the brunt of it. But hey, as we figure things out, we don't have to take the brunt of it, because we already know the nefarious actions that go on in the markets. We have to play along with them. If it looks like something's going to get screwed up in a play that you're in, and you're like, I don't want to be part of this, you already know better. Just hit the ejection button and call it a day. If you are in for every battle and every ticker, and you don't mind holding bags and you'll hold them forever, then, diamond hand away. It's your trading plan. It's how you want to trade. Do you want to make money? Are you trading to pay bills? Are you trading to build your account? If so, then nefarious things we don't like. We want to make our money in the day. We don't want to sit on it in the account. But Some people are up for the battle, and hey, somebody's got to be there for the battle if that's what they want to do. So let's watch it. Let's see if we get the breakout. If not, like I said, watch for the 200 MA somewhere around 22.5, 23 cents. And then ultimate bottom line 18 cents for now. And if we get there, it's I probably won't be covering it at that point if we do get down there. Where is my Ortex? All right. Ortex. What are we looking like on Ortex today? So still kind of messed up in my opinion as far as the numbers go with Ortex, just because of the float change that has happened, and I don't think those true values have switched over, so not even really worth mentioning. But hey, if there are no shorts left in this and big money wants to take it to say where the analyst price projection is, or even get it back over $1, I'm okay with that. We don't need shorts to make upside moves. We just need big money to allow it to happen and not fight every step of the way. So let's just leave that alone, because it's coming in at 3.61%. It's saying it went up, but cost to borrow average is still high, which is nice to see. That means maybe they are still relatively hard to borrow. People are getting a pretty decent penny for them, and they'll want to return them more so than hold on to them if they're taking them out at that price. They definitely don't want to sit on anything with that kind of interest for over a year, unless they think that they're going to bring the stock down a full 100%, and then at that point they're paying 136% a year, so it wouldn't make a whole lot of sense. So I do think some of those will get returned. I think we'll see the cost to borrow average come down in time, and I just don't know, what big money's mindset is. Do they like the company enough? Does the fundamentals work for them? Do they want to carry this on to the upside, or are they going to continue to just let it get smashed? Are they accumulating? Do they want to let it continue to work its way down so they can accumulate at a better price? Possibly. There's 1,000,001 different scenarios. So let's just continue to watch and see how the markets move. I don't know about today, but maybe next week we'll see a little bit of that recovery back to the upside. Like I said, because big money ebbs and flows. They gotta pull their money out slowly. So we'll look for the overall markets, the indexes, to hopefully have some sort of recovery next week, unless things just get even worse here in the United States and the New York Stock Exchange. So let's go from there, guys. Have a good weekend. I appreciate you guys coming back so much. I will catch you in the next one. As always, stay golden, people, and may your accounts stay green.